you.
Buzz. Coming up, the Nigerian exchange closes higher even as more stocks fall than rise. Nigeria revives its decade-old plan to list the national oil company on the stock exchange. The cost of servicing Nigeria's domestic debt more than triples on rising interest payments. Tax collections surge past 27 trillion naira as reforms reshape government revenue. And global stocks rally as weak American jobs data eases fears of another interest rate rise. I am Louisa Asidi. Stay with us. Welcome. We'll begin with the state of the nation's books as Nigeria's total public debt has reached 159.35 trillion naira as of the end of March. That is according to the latest figures from the Debt Management Office. The quarter itself was almost flat, but step back 2 years to when this administration took office. The figure stood at 87.38 trillion naira. Now, it has nearly doubled since then. The debt is split almost evenly between domestic and external borrowing, with lenders like the World Bank holding much of what Nigeria owes abroad. The question is what all of this means for the ordinary Nigerian, for the cost of borrowing, for the naira, and for how much room the government has left to spend. To help us make sense of it, I'm joined by Nkechi Madueze, the Delta State's Director of Statistics.
The Delta Broadcast Media Organization, in conjunction with the Delta State Ministry of Information, presents the Delta Broadcast Media Conference 2.0. Theme: The Broadcast Media as a Democratic Catalyst, Shaping Public Trust and Electoral Credibility in 2027. Keynote speaker, Sheun Okimbaloye. Anchor, Politics Today on Channels Television. Guest speakers, Ayo Mairo Essay. Anchor, Arise News. Agatha Amata, CEO, Trend FM. Samuel Fejoku, veteran broadcaster and senior special assistant to the governor on protocol. Guest of honor, Honorable Charles Ehiedu Aneagu, Commissioner for Works, Rural Roads and Public Information, and Right Honorable Imomotimi Dennis Guo. Speaker, Delta State House of Assembly. Special guest of honor, His Excellency, Right Honorable Elder Sheriff F.O. Oborewori, the Executive Governor of Delta State. Convener, media personality, Ruki Onoro. Date, August 14, 2026. Time, 10 a.m. Venue, Unity Hall, Government House, Asaba. There'll be high-level networking, media interaction, capacity building, awards, and lots more. Register to attend on www.deltabroadcastmediaconference.org. For inquiries, call 0706-701-8400, 0803-874-9265. Delta Broadcast Media Conference 2.0, powered by Delta State Government. Sponsors, Dominion Pearl Homes and One Niger app. Supported by NTA, DBS, Quest FM and TV, Warri Sentinel, Trend FM, Mega FM, Baramatu Voice, Oko FM, Crown FM, Sleek FM, Eku FM, Big Heart Radio, Cruise FM, Atlantic TV, Rise FM, and Dott TV.
Okay, we're back to the interview with Nkechi Madueze, the Delta State Director of Statistics. Ma'am, you're welcome. Please, can you back away from the screen a little bit? Oh, thank you. First of all, Nigeria's public debt stock is now reported at 159.35 trillion naira, with only a marginal increase in the first quarter of 2026. From a statistical perspective, how should we interpret this? Is the headline stock figure more meaningful, or should analysts focus primarily on the pace of quarterly and annual growth? Ma'am, it seems we can't hear you. You have to unmute your mic. Okay, we're having a little difficulty with that. We'll come back to the interview, but let's just go into the business buzz. Okay, she's back. Ma'am, can you hear us? Oh, she still can't hear us. Okay. Oh, she still can't hear us. Let's go straight into the business
Okay,
buzz.
I can hear you now.
Oh,
good
okay.
morning. Good morning.
Good morning.
Yes.
Good morning.
Yeah.
It's so lovely to have you here today.
Thank you very much.
Okay, so let me ask that question again. I said Nigeria's public debt stock is now reported at 159.35 trillion naira, with only a marginal increase in the first quarter of 2026. From a statistical perspective, how should we interpret this? Is the headline stock figure more meaningful, or should analysts focus primarily on the pace of quarterly and annual growth?
Well, from the statistical, thank you very much for this question. It's a good question. But the issue is this: with 159 trillion naira, that is our debt profile, that is roughly $99 million.
Ma'am, we aren't really seeing your face properly. You have to step away from the screen a bit. Oh, thank you.
Okay, can see me now. Okay, we're talking about $99 billion. That is our debt relief. And from the statistical view, as far as I am concerned, going by this, it means that our economy is not as healthy as we want it to be. So, but if we can have debt relief that the office is actually working on, automatically it will make our economy healthier with any debt relief. And apart from that too, from your own question, what we are looking at is this: the growth. Yes, there's growth in our economy, but the debt, if you look at our debt, you have to look at it statistically, holistically. That 57, we have we have internal debt and we have external debt. External debt owed to World Bank and IMF. Then international debt owed to local investors and maybe companies and all of that. So the money now, you're talking about our debt, is actually, our problem is the revenue we have is channeled towards servicing debts, which to me, from the statistical angle, ought not to be. But if we can have relief relief, it will reduce our debt. And from there, we'll be able to do a lot of things statistically. That is in terms of job creation and all of that. To me, what we have concerning the health of our economy, I know we are growing. If you go towards our GDP, that's our gross domestic product, we are growing. But the issue now is the common man will tell you that if there is growth and he cannot feel the impact in his pocket, it means there is no growth.
Okay.
That is where
the debt
yes.
shock has risen from about 87.38 trillion naira at the start of the current administration to the current level. Now, based on NBS and DMO data, what are the main factors that have contributed to this increase? Is it new borrowings or exchange rate effects, arrears, capitalization, or are there other elements?
Well, from our nominal GDP calculation, because when you talk about new things, yes, we have people want more. We want more things. Unlike before, we're talking about the 83 trillion issue. When you look at it from the statistical angle, wants and needs, they are two different things. What I want and what I need, they are different. I want a car, I want a house. But do I really need these things? So we are moving from what we need to what we want. And this had actually catalyzed the issue. Like we're talking about roads, we have roads, but we want better roads. When your wants increase,
debt now accounts for
that is it.
Roughly 54.85% of total public debt, with external debt at 45.15%. Now, what does this shift in composition tell us about the government's borrowing pattern over time, and how has it evolved across administrations?
This one is $1 million question, but all the same, I'll try my best. What we are trying to say is this. Before, in the past administration, we had things like our revenue. We had things from before. We did not, let me start from the very beginning. When Nigeria had a lot of money. Let us start from there. In the early 70s, we had a lot of money to the extent that IMF and World Bank borrowed from us. It's on record there. $240 billion. Let us start from there. Then we had our crude oil. We still had our hide and skin, cocoa, and all of that. Then over the years, we dropped agriculture and started thinking about our oil. And before we knew it, we nosedived. Okay, this time around, we are now saying we are now borrowing. We have entered recession. How do we come out of this? The money we're talking about, everybody is shouting that the money is huge. Why is our debt profile like this? We are servicing, can you imagine 45%? From the revenue we are having, we have 45% debt. And if you channel all this one, a lot of it towards servicing your debt, you can see the issue. That is what is happening. But as far as I'm concerned, if we can actually move away from oil and go back to agriculture, we'll be able to generate more revenue. And before you know it, maybe in the next MBS, it will reduce. And if we can have debt relief, it will help us towards getting what we want and where we are going to. If you look at what we have now, Nigeria was not like this before. We have more roads. We have so many hospitals, so many schools, and all of that. So our wants have increased, my dear. And that is it. So once you have wants, you have needs, and every day you keep asking for more things. And if you want to meet them, the only thing you can do is to borrow for the time being until you're able to break even. Have I answered your question?
Own perspective, what are the observable effects of rising domestic borrowing on interest rates, banks' lending behavior, and credit availability to the private sector, as reflected in NBS, CBN, and DMO data sites?
Well, in this particular area, let me see. Okay. The effect is this. That's when you look at our companies, some of the companies that we have, people going to borrow and all of that. And our money, please, can I have that question again?
Okay, no problem.
Repeat the question, please, again.
Okay, I said from your perspective, what are the observable effects of rising domestic borrowing on interest rates and banks' lending behavior and credit availability to the private sector as reflected in NBS, CBN, and DMO data sites?
The effect from my own perspective is this. The bigger boys will be able to borrow. The smaller.
Oh, okay. It seems we have lost her. So I think we'll go straight into the business buzz. And if we can get her back, we'll continue with the interview. But before we go into that, let's take a short break.
The Delta Broadcast Media Organization, in conjunction with the Delta State Ministry of Information, presents the Delta Broadcast Media Conference 2.0. Theme: the broadcast media as a democratic catalyst, shaping public trust and electoral credibility in 2027. Keynote speaker, Sheun Okimbaloye. Anchor, Politics Today on Channels Television. Guest speakers, Ayo Mairo Essay. Anchor, Arise News. Agatha Amata, CEO, Trend FM. Samuel Fejoku, veteran broadcaster and senior special assistant to the governor on protocol. Guest of honor, Honorable Charles Ehiedu Aniagu, Commissioner for Works, Rural Roads and Public Information. And Right Honorable Imomotimi Dennis Guo, Speaker, Delta State House of Assembly. Special guest of honor, His Excellency, Right Honorable Elder Sheriff F.O. Oborewori, the Executive Governor of Delta State. Convener, media personality, Ruki Onoro. Date, August 14, 2026. Time, 10 a.m. Venue, Unity Hall, Government House, Asaba. There'll be high-level networking, media interaction, capacity building, awards, and lots more. Register to attend on www.deltabroadcastmediaconference.org. For inquiries, call 0706-701-8400, 0803-874-9265. Delta Broadcast Media Conference 2.0, powered by Delta State Government. Sponsors, Dominion Pearl Homes and One Niger app. Supported by NTA, DBS, Quest FM and TV, Warri Sentinel, Trend FM, Mega FM, Baramatu Voice, Boko FM, Crown FM, Sleek FM, Eku FM, Big Heart Radio, Cruise FM, Atlantic TV, Rise FM, and Dott TV.
Welcome back. Now let's look at the markets where the Nigerian exchange closed higher on Monday. The all-share index added nearly 2,969 points, a gain of 1.21% to close at 248,542 points. Market capitalization rose by 1.92 trillion naira to 160.43 trillion naira. Market breadth, though, was negative. 25 stocks advanced, 36 declined, and 2 closed unchanged, with the index lifted by its heavyweights. NAHCO led the gainers, rising 9.29% to 153 naira, followed by Airtel Africa up 8.59% and Churns up 7.35%. Meanwhile, Avacap pays the losers, falling 10% to 9 naira 90 kobo. Now to the global markets, where stocks pushed higher on Monday as oil prices fell back sharply. Let's start in Europe, where the session ended firmer. Germany's DAX was a little changed at 24,209 points. The CAC 40 in Paris rose 0.5% to 8,200 points. And in London, the FTSE 100 also added 0.5% to 10,303 points. Over in Asia, the picture was mixed. Japan's Nikkei 225 closed a little changed at 64,217 points. South Korea's Kospi added 0.4% to 7,763 points. Hong Kong's Hang Seng lost 0.7% to 24,249 points, while Shanghai Composite eased 0.2% to 3,987 points. In Australia, the S&P ASX 200 slipped 0.2% to 8,633 points, and the Sensex in India was 0.2% lower at 73,832 points. Now turning to Africa, where the major exchanges were mixed. In South Africa, the Johannesburg All-Share fell 0.8% to 116,989 points. Egypt's EGX 30 eased 0.2% to 53,627 points, and Morocco's MASI index slipped 0.3% to 17,739 points. Ghana's Composite Index edged up 0.1% to 8,807 points. Kenya's Nairobi All-Share added 0.4% to 192 points. And in Zimbabwe, the All-Share Index jumped more than 6% to 330 points. Now to energy and commodities, where oil prices pulled back sharply. Brent crude, the international standard, fell 3.4% to $89.96 a barrel. United States benchmark crude lost 3.2% to $87.17. While natural gas was down 3.3%, gold moved the other way, rising 1.1% to $4,177 an ounce, while silver gained 2.1% and copper added 1.7%. Back on Wall Street, stocks rallied into Monday's close. The S&P 500 rose 1.1% to 7,347 points, while the Dow Jones Industrial Average climbed 1.4% to 50,636 points, and the Nasdaq Composite gained 1.5% to 25,539 points. Among the day's movers, Intel climbed 7.5%, Nvidia added 1.1%, and Oracle fell close to 11%. Investors now look to this week's inflation data, as July's Consumer Price Index is forecast to have risen at a 3.4% rate, easing slightly from 3.5% in June. And finally, on the currency markets, the dollar slipped 0.2% against the Japanese yen to 160.19. The euro edged up 0.1% to $1.155, and the pound was slightly firmer against the dollar. Let's take a quick break. More business buzz when we return. Welcome back. Now let's look at Nigeria's plan to take its state oil company public as a full decade after the idea was first floated. President Bola Tinubu told the leadership of the Nigerian Exchange Group that the Nigerian National Petroleum Company would eventually be listed in its entirety, pointing to Saudi Arabia's Aramco as the model. The company controls assets valued at roughly $150 billion, and analysts say even a partial listing would dwarf the market's current heavyweight and transform the exchange. However, questions remain over transparency and remittance, and with the Dangote refinery also targeting a $5 billion listing by October, the second half of the year could redefine Nigeria's capital markets. Now to public finances, where the cost of servicing Nigeria's domestic debt has more than tripled in 2 years. Figures from the Debt Management Office show the federal government spent 3.14 trillion naira on domestic debt service in the first quarter of this year, up from under 1 trillion naira in the same period of 2024. Almost all of that went on interest payments alone, a reflection of elevated borrowing costs and the government's heavy reliance on the domestic markets. Economists warn the rising interest bill risks crowding out private sector credit and leaves less room for spending on infrastructure and services. However, there is better news on the revenue side. Nigeria's tax collections have more than doubled in under 3 years. The Nigerian Revenue Service says collections rose from 12.3 trillion naira in 2023 to 27.1 trillion naira as of July this year, an increase of 113%. The agency credits digitalization, 4 new tax reform laws, and the closure of loopholes, and points to rising external reserves, a trade surplus, and stronger capital inflows as signs of a broader recovery. The report acknowledges the gains followed painful adjustments and says sustained reform will be needed to consolidate them. Staying with the economy, Nigeria's foreign exchange bill for petroleum imports has jumped sharply despite growing local financing. The central bank's latest annual report shows foreign exchange use for oil sector imports rose by 115% last year to $4.86 billion. The figures underline how dependent the market remained on imported fuel through 2025, when imports still supplied nearly 2/3 of the petrol consumed nationwide. That picture is now shifting as petrol imports fell by around 66% in the first half of this year as the Dangote refinery ramped up supply, though marketers say price, not patriotism, but decide where they buy. Time now for another break. Stay with us. Welcome back. Now moving on to the government's tax reforms, which are also reshaping who gets to do business with corporate Nigeria. Under the new Tax Administration Act, large companies face a 5 million naira penalty if they award contracts to suppliers without a valid tax identification number. Analysts say the rule will push corporates towards a no registration, no contract policy, a move that could shut artisans, freelancers, transporters, and farmers out of corporate supply chains. Tax experts say the reform could accelerate formalization of small businesses, but only if registration is made simple, affordable, and fast. In the aviation sector, lawmakers are pushing to overhaul how more than 1 trillion naira in industry revenue is being shared. The House of Representatives is reviewing a formula covering roughly 1.13 trillion naira generated this year from ticket and cargo sales charges. The proposal would cut the civil aviation regulator share from 56% to 40%, while raising the Airspace Management Agency's allocation to the same level, a shift that has already stirred tension between the two bodies. Lawmakers insist the aim is equity and transparency, not winners and losers, with automated remittance among the proposed changes. Now to Enugu State, which has secured a 15-year lease to run a major digital innovation hub. The Nigerian Communications Commission has handed the state its Digital Industrial Park and Learning Center with a mandate to support artificial intelligence, startups, and digital skills. The regulator says the facilities are meant to attract investment, create jobs, and position Nigeria as a competitive destination for technology-enabled services. Success, officials say, will be measured not by buildings, but by the businesses and jobs the hub generates. Rounding off our home coverage, Nigeria is positioning itself for a larger slice of Africa's artificial intelligence economy, estimated to be worth up to $1 trillion by 2035. The push comes ahead of the GITEX Nigeria Technology Fair, which opens in Abuja and Lagos at the end of this month under the theme of sovereign innovation. The government points to nearly 2 million registrations under its Technical Talent Program and a national fiber project expected to create more than 150,000 jobs. The ambition is clear: to move Nigeria from a consumer of technology to a producer and exporter of it. Let's take another quick break. Some global business news when we return. Welcome back. Now to the international markets, where stocks are rising after unexpectedly weak jobs figures from the United States. Official data showed the American economy lost 23,000 jobs in July, with earlier gains revised downwards. Investors read the numbers as a sign the Federal Reserve may hold off on raising borrowing costs, sending the S&P 500 to a fresh record and lifting markets across Asia. Analysts caution, however, that inflation figures due later this week will be the real test, while oil prices continue to climb on tensions around the Strait of Hormuz, with Brent crude trading above $84 a barrel. And finally, to East Africa, where Tanzania is courting fresh investment from Nigeria's Dangote Group. A Tanzania government delegation visited the Dangote refinery in Lagos to advance talks on new investments in fertilizer production, energy, and industrial infrastructure. The group already operates Tanzania's largest cement plant, an investment worth about $800 million. And officials in Dar es Salaam say deeper ties would support industrialization under the African Continental Free Trade Area. This is a reminder of how Nigerian capital is increasingly shaping industrial development well beyond our borders. That's all we have for you today on Business Buzz. I am Louisa Asidi. Thank you for joining us.